How to apply for the new SBA $10 million financing. A step-by-step guide to what you need in place, where to start, and how the 7A and 504 programs work together. On July 4th, the U.S. Small Business Administration, the SBA, doubled its combined 7A and 504 lending ceiling to $10 million, the largest financing expansion in the agency's history. Qualifying businesses can now stack up to $5 million from each program, real flexibility for capital-intensive companies in construction, logistics, food production, and energy. The opportunity is real, so if you're considering this financing, here's where to start, what to gather, and how the two programs work together. Step 1. Know which program funds what. The 7A loan is the flexible piece. It can fund equipment, working capital, business acquisition, or real estate, and it runs through an SBA-approved lender, typically a bank or credit union you already have a relationship with. The 504 loan is the fixed asset piece. It's built specifically for long-term, fixed-rate financing on major assets like real estate or heavy equipment, and it runs through a certified development company or CDC. A nonprofit lender that partners with the SBA. To combine them, your 7A lender is usually your starting point. They'll bring in a CDC if your plan includes a real estate or equipment component alongside working capital needs. Know which piece your plan actually requires before you apply, so you're not borrowing more than the plan calls for. Step 2. Find the right lender. Start with the SBA's Lender Match tool, a free service that connects your business with SBA-approved lenders based on your specific financing need. It takes about 5 minutes to fill out. The link is in the text version of this Substack. Look specifically for lenders with Preferred Lender Program or PLP status. These lenders have delegated authority from the SBA, meaning they can approve loans in-house instead of waiting on a separate SBA review, often cutting weeks off the process. For the 504 piece, you'll need a CDC. The SBA maintains a directory of certified CDCs by region, and your local SBA district office can also point you to the ones active in your area. Step 3. Assemble your documentation before you apply. Lenders move faster when the file is complete on the first pass. Before you apply, have these ready. 2 to 3 years of business tax returns, plus your P&L and balance sheet. Personal tax returns and a personal financial statement for any owner with 20% or more equity. They'll be personally guaranteeing the loan. A current debt schedule listing every existing business obligation. A written use of proceeds statement tied to a specific plan, not a general purpose. This is where have a plan first becomes a literal underwriting requirement. Collateral documentation, if the financing involves real estate or major equipment. A short business plan showing how the financing supports a specific, already identified initiative, not a hypothetical one. Step 4. Know what lenders actually scrutinize. 2 numbers matter more than anything else in your file. Debt service coverage ratio. Lenders want to see your cash flow can comfortably cover the new loan payment on top of your existing debt. Typically looking for a ratio of at least 1.15 to 1.25 times your obligations, depending on the lender. Owner equity injection. SBA financing generally isn't 100% financed. Lenders expect some cash investment from ownership, which signals you have a stake in the plan succeeding, not just the capital arriving. Understanding both numbers before you apply lets you gauge honestly whether you qualify rather than finding out 3 weeks into underwriting. Step 5. Plan for the real timeline. A standalone 7A loan typically takes 30 to 90 days from application to funding, depending on the lender and how complete your file is. A 504 loan usually runs longer, often 60 to 90 plus days, because it involves both a lender and a CDC. If you're combining both programs, plan for the longer end of that range. Coordinating two parties adds time, and building that into your expectations now means the loan is ready when your plan needs it, not the other way around. Summary: the SBA's new $10 million ceiling is a real opportunity, but the process rewards preparation. Know which program your plan actually needs. Find a lender with the authority to move quickly, and have your documentation ready before you start the conversation. The businesses that use financing like this, well, aren't the ones who apply fastest. They're the ones who show up with the plan built, the file complete, and a clear answer for what the money is going to do. New here? This is the deep dive edition of your weekly ally. While our Tuesday newsletter covers the strategy, these Friday pieces go further into the tactics and the work behind. Subscribe to get the full playbook delivered every week.